Hello guys, here we are with the second video of the liquidity, third video of the bootcamp. Finally today we will go more in detail, we will see more example, so let's start immediately, but of course before, as always, our Instagram page always available for messages, for understanding, etc. We didn't trade. We've been a bit inactive these days because of the Easter break. So we were on vacation. So yeah, of course, when we have this vacation, we take a moment to step back from the chart, just to relax and clear your mind a bit. It's always important, trading is all about, of course, knowing the right concept, but the psychology, it's always important, of course, to be a good trader, to be a profitable trader. But yeah, let's start immediately with the video of today.
Yeah, of course, guys. Hello, everyone. And yeah, before looking at examples, I will do a quick recap of the last video. If you remember, we saw three types of liquidity. The transaction liquidity, continuation liquidity, and inducement liquidity. Quick recap. Okay, guys, look at this beautiful drawing. Here we have transactional liquidity, then continuation liquidity, took external liquidity, this size, then continuation liquidity, transactional liquidity, continuation liquidity, etc. And the last one, the more important, the inducement liquidity that fake the change of character for SMT. Then they look for short in these zones, take out and continue it to the wrong side. So now we put all this thing together, and we can understand a little bit more in detail how to spot this liquidity in the chart. I will do before another quick example to make it more clean. Okay, let's drawing. It is perfect. Okay, so as I told before, we have the three types of liquidity, and this liquidity generate something in the market. Okay, as you can see in this size, we have a break of structure. So this generate a buy limit from the breakout traders. So in these zones, all breakout traders want to enter long. So we have an injection of liquidity. Okay, guys. Also, when we took out this external point, what we have is transactional liquidity. So, let's drawing again. When we take out this external point, okay, we have also injection of liquidity by people that try to take this transaction liquidity. So you understand that in this area right there, we have a lot of liquidity that market want to take out after. For example, here we take out internal structure over there. Okay, so what we have, breakout traders here, and the stop loss of traders that want to trade the transactional liquidity. Okay, guys. And what also we have, you can see then in the chart, we have trend line liquidity. Okay, because obviously who trade with retail concepts try to drawing this beautiful trend in the chart. So yeah, this is also another way to identify, to spot liquidity in the market, because yeah, now we have also retail traders that looking to buy when the candles tap into this beautiful trend line. So now we have injection of liquidity here, here. Also, what we have smart money traders that want to buy from the lowest point in the market. So in this scenario, buys, we smart money want to take the perfect entry in the demand or supply area, whatever it is. Okay, now here we have smart money traders. So we have retail traders that looking for the tap on the trend line. We have smart money traders that want to buy from the bottom in this case. So here we have injection of liquidity. We have also continuation traders. That's okay. We return on this area. So now I can enter here. Okay, because we close the first structure. So we enter here. Also, what we have Fibo levels. Who know Fibo? Traders want to trade in this case below the 50% level. So also in these zones. So guys, we have a lot of liquidity that exactly the 50% level, very important. So guys, we have a creation, a build-up of liquidity to the upside. So what we want to look for is the takeout of all this beautiful liquidity. So this is a way to identify liquidity in the market, very basic. But behind this drawing, there is always the concept that external liquidity to internal. What we have, Fibo levels, demand zones, trend line, top trend line, support and resistance, all this stuff. So all this liquidity, so transactional continuation and inducement is represented with all this beautiful drawing. So trend line, Fibo, support and resistance, breakout traders, and so on. So now let's clear all this sheet and let's look some examples. This is beautiful. So we can start from the bottom, but we can see very easy. Look at this beautiful quadruple touch. Obviously is not perfect, but doesn't matter. Quadruple touch over here, small trend lines. What we have, breakout traders here. Demand, breakout, demand, trend line, looking for short here. What we have, bam, smash, take out all this internal structure, all these trend line retails, all these demand zones, to finally look for external liquidity. So what we have, continuation trade, continuation liquidity. Always the same shit, guys. So external, we took out external. What we want to look for, transactional liquidity, internal points. So guys, what we have here, triple bottom, also here, double top. So we have a creation of liquidity on the both sides of the charts, and also here. So what we are creating, liquidity to the upside and to the downside, to finally take out all these premature buyers. This what is this? Do you remember? BA liquidity taken out. This point of interest finally internal to what? External. Here taken out all this building of liquidity, and then what we are looking for, transactional liquidity, guys. Always here, build up, What is this? Smart money trade, smart money trap. Look how beautiful is this, faking reaction, beautiful trend line for the downside, triple top, always here. We take out finally this smart money trap. And now what we want to do, we want to take out external liquidity. Guys, it's always the same stuff. Take out the external point of liquidity, what we are looking for, transactional liquidity. And yeah, what we have here, beautiful trend line. So wow, smart money trap, people start to looking for short, always here, double top. Look how always the market create the same stuff, guys. Double top, look at this beautiful triple bottom. Yeah, always, guys, market create liquidity on the both sides. Finally take them out. Look out the speeds, guys, the speed. Take the internal liquidity, and now what we want to look for, bam, external liquidity, continuation liquidity. Always, guys, here what we have, breakout traders. Look how beautiful is this trend line, breakout traders, smart money traders. Also, if you put FIBO levels, I think this zone is 50%. Yeah, if you try to look.
From here,
Yeah.
Yeah.
Yeah, beautiful, beautiful. 50% level. So now we are in discount area. So we can go long, exactly. Look, guys, here we are creating a lot of liquidity from breakout traders, trend lines, and so on. And finally, what price did, look at this beautiful zone, this beautiful smart money trap, one faking reaction long. So now people, okay, market is start to go long, enter here, triple bottom. Also some kind of trend line, re-entry, because yeah, guys, maybe we don't take this beautiful entry, we can re-enter here. And yeah, market faking reaction to the upside to finally take out all this beautiful liquidity, this quadruple top bottom. What is this? Yeah, 1, 2, 3, 4, 5, 6. This is all liquidity taken out, and then yeah, smart money traders looking for short over here. And what is this? Smart money trap. Look, this beautiful building of liquidity. What is this? 1, 2, 3, 4, 5, 6, 7. Crazy, guys. A lot of liquidity over here, and then finally take out.
Yeah, and of course, as we show, the support, resistance, the trend line doesn't have to be perfect aligned, you know what I mean? But this, of course, is... Here you have a lot of liquidity. This is for sure. So this is important to understand that it doesn't have to be perfect, of course, but you still have a lot of liquidity up there.
Yeah, guys, we are not Giotto, so we cannot drawing perfect lines, but you know, it's important to understand the concept, not drawing the perfect lines. Okay, guys, let's try to look for other examples. Yeah, beautiful over here. Look, guys, 1, 2, 3, 4, 5, 6, whatever it is. So this is, here we have a beautiful resistance. And yeah, what we are looking for, short, obviously. Break. So now what we want to do, these zones to go short. Look, resistance, FIBO levels, 50%. Breakout. So everyone is starting to look for short. Another example here, double top, trend lines. Look how beautiful is this. Trend lines, channels. So yeah, guys, this is a crazy build-up of liquidity to the downside, and then price what did, bam, smash all the liquidity to the upside. But before, what we have here, trend line to the upside, smart money trap, faking reaction, smash all this trend line liquidity, premature buyers to finally go long. Crazy, guys, crazy.
Yes. So let's do something now that will probably help you to how to find how to understand in the best way where is situated the liquidity. So what we need to understand first of all is that when we are in the market, we will have active orders, okay? Active orders and passive orders, okay? So as you probably arrive at this moment, of course, I hope you have seen the video of the last time, because otherwise you will not understand the meaning of the today's video. But yeah, these are two types of orders that we can have. Sorry, and of course when we are in the market, we are doing market execution, it's an active orders, and when we do have order limit, it's a passive order. This order limit, okay, this order limit, so the passive orders, it creates the order book, okay. The order book is important because it tells you, of course, where the liquidity is situated. And of course, you understand that is an advantage to know where is the liquidity. Important also to understand that it doesn't exist, the stop hunt, what everybody tells you, you know, stop hunting, etc. It doesn't really exist, but the institutional are actually looking at order limit, okay? Because they can see the order limit, but they cannot see the stop, you know what I mean? So as I told you, the stop loss hunt is just the consequences of the order limit. Okay, now let's understand a bit better with a small example, so that maybe you will go more in detail into understanding where are all these orders, the passive, the active, the order limit. That's what that's what you need to find out in the market. So let's say this is a support, of course, as you can see, no? And let's do just so people are entering here short. Okay, I put the TP in a random way, and again here maybe they enter as well. Okay, and again here I have another touch, so they enter here again. Okay, and here again, and again and again. So of course this is a classic support and resistance trend. Okay, so as you can see here, almost a perfect line, and here of course all the retail traders are entering short. So if we imagine we should have a heat map, okay, where we can see the order book, okay, and this is our heat map. So where we will have the liquidity, so the stop loss, of course here, okay. So this can be the first level, and let's say we do orange, for example, okay. So this is a high level of liquidity, okay. So let's put maybe not 100, but like this, okay. So it's called heat map. of course, because of the color, no? More it's the more heat you have, the more liquidity you should have, no? So here you have the first liquidity, okay? But as you can see, of course, here you can have other liquidity, okay? Because here you have another support or resistance, call it however you wish, but here you have another one. So here people as well are entering in long, okay? Here are entering long. So as you can see, you have here people entering long, here people entering short, and here you have the main liquidity, of course, is up here, but as well here. Then what do you have? What do you have as well? What can you have? You can have other. Here you can have other liquidity, but why? Because maybe here you will have breakout traders, okay? That can be entered after, maybe from here, okay? But we will see it later. Here you have breakout trader, okay? So it's the same thing for here. Here you have the support, and here people have the order limit, okay, placed on. So that's why you still have liquidity down there and up here. So guess what? Here you have dynamic liquidity, trend line, you can call it how you would like to, okay? So of course, this upper part here has a lot of liquidity to be taken out. Because as you can see here, you have another support or resistance, and here as well you have so many touch, no? So here you have a lot of liquidity, and of course when we take out liquidity, what can we expect? A reaction. In fact, here we take out the liquidity and here it react a bit, okay? Here we take out this is not really taken out. This for me is not take out, still a touch, you know, but we can expect after a sweep we can expect a reaction, of course. So guess what happened here, okay? Here we have the liquidity to the order limit, okay? So the market goes down until here. It activated here the breakout limit. So the breakout trader are entering, they enter here, okay? First it gives a reaction and it takes out again. So here I took out the stop loss here, I took out the stop loss of the breakout traders, and I took out the stop loss of the double touch. Okay, what happened again? So maybe I can show you like this. Here now, what is happening? We go up. What is happening how? Here, dynamic liquidity. Okay, showing also, you can call it channel, no? To the upside. So what happened here? The market goes up and it takes out the first liquidity here, okay? And then what happened? Activated the breakout traders order limit, but guess what? It's not even giving a small reaction. It goes down immediately. So here we take out all the stop loss. Okay, that's how the market works. So every time you're in your chart, imagine you always have a heat map, okay, a book map in front of you. You focus 1 second and you say, okay, where I will have the most orders, where I will have my order limit, etc. This is important to know, to understand. Again, because the stop loss is just the consequences of the order limit hunt, okay? Because that's what institutional can see, the order limit. So again, what do we have here? The trend line dynamic liquidity. So guess what? Here we can always have the heat map, you know? here we can have the heat map, of course, in a vertical way. But what happened here during the Asia session? Big push to the downside. We take out all the trend line liquidity, and as well, again, here maybe we have order limit, okay, for the breakout traders, because this is a trend line, so maybe people are entering after this. We don't know, but it can be possible. And of course, it gives a first reaction to then take out the stop loss. Again, what we can see here as well, dynamic liquidity, okay, because the trend line, the dynamic liquidity, the small channel, we can find it a lot of times during the Asia session. In addition, I wanted to say as well that here what we can found, I hope you guys understand, because here we can have all the type of liquidity. So we have trend line, breakout, support and resistance, and of course, which one is the most important to understand? The smart money. Why? Because here what do we have? A change of character, okay, a Koch. Change of character. So guess what? Here, why here we can have even more order limit, okay? So it's even an advantage, even something more to know, to understand that, say, okay, here the heat map, it's very, very, very hot, okay? Because I have so much liquidity that has to be taken out. So me, that I'm an actual trader and not a smart money, I know how the liquidity works. I know that this is an SMT, a smart money trap. In fact, what happened? We take out all the smart money trap, the support and resistance. Again, as I told you before, we activated the order limit here for the breakout, and we take out everything. Okay, maybe this can be a bit more advanced, a bit more in detail, but really, if you go into the graph and you start thinking like this, okay, and you put in practice the liquidity in this way, plus as we showed before, you can see how many examples of the market doing always the same thing. You really can start understanding how the market moves, okay? And really, it created so many times. Look at here, for example. Here again. What do we have here? We have 4 touches. So guess what? Here we have the possible stop losses, okay? And guess what? Here we have the breakout trader stop loss, order limit, sorry. Okay? So guess what happened? Here we do have the 3-4 touches. Market goes here, takes out the stop, manipulates the stop loss, activates the breakout traders. It gives the first reaction. Here it went up. Probably the stop loss is up here, or whatever. It gives the reaction, and then boom, we take out everyone. Okay, so as you can see, it's always the same stuff. Of course, what we can see as well here to give us more additional information, that here we have a change of character, okay? So what is this? Of course, a smart money trap. And what happened? Boom, just devastated. Just went up, and the smart money trap was boom, done. Okay, so as you can see, it's always the same stuff. It's important to maybe start understanding a bit more the liquidity. Look at here what we created as well. Huge trend line, okay? Of course, Of course, it's something that doesn't have to be taken out immediately, you know. But yeah, this is how it works. Okay, look also today what we had here. Boom, huge trend line. Here we have the order limit, etc. Boom, activated, the price went up. Okay, so this is that's it for the video of today. I hope you understand how it works, because this was more an advanced class, an advanced lessons about the liquidity. And yeah, again, show us your support, and of course we will continue to do our best. And I'll see you to the next video, guys. Thank you.